Hello friends, welcome back. Yet another YouTube live video, and today it's an interesting topic. Gold. I'm sure this has been one important question for all of us: that what is the best time to buy gold? And in this last 2 months of consolidation or sideways range, you call it, gold. Has finally seems like I think it's at an interesting opportunity over here. So we'll see what the charts of gold are transpiring and how traders and investors and anyone who's looking to buy gold could probably try and take an opportunity over here. So there's something very interesting in terms of chart patterns. Now in the month of July and in August first week, I had come out with this video on gold and indicating that why the gold charts indicating of a short term pause or a correction, and there could be a chance that the asset class may go into a sideways range. This is exactly the reason. So I pointed out that whenever the gold RSI hits this red line mark, which is the 90 RSI mark, on the monthly time frame, there is something different which transpires. You see gold asset classes go into a sideways range for a prolonged period of time, and then you eventually see a breakout. So we saw something like this in 2005, then something like this in 2008 as well, and then you saw continuation of rally. Now gold on the charts of June and July exactly topped out near this 90 odd RSI levels. It had hit that 2000 2100 kind of a zone, and post that you saw a correction of more than $300 happening into gold in the global prices. So this was something which played out this time as well. But the question here is that now with gold back at those sub 1900 levels, whether it's a good time to buy and what are the chart patterns actually indicating, right? So we look at the current charts of the gold, and I've looked at the last 1.5 years of chart patterns for gold, and this is something which is extremely interesting because in this rising channel pattern of gold, you've seen three major periods of consolidation, and almost all three of them are identical in shape. So we'll start with the start of this channel pattern over here. As you can see that gold prices started to rally from those 1100ish, 1050, 1100ish kind of levels in the mid of August or in the mid of 2018. From there, you saw a steep rally coming by, then a multi-month consolidation. This consolidation lasted for almost 3.5 months for gold prices. Post that, you saw a breakout. This was the second wave of a strong breakout for gold. Then you saw consolidation yet again. In fact, again, this consolidation was almost 3.5 months for gold prices. Then you saw a breakout again. Then you saw a big shakeout. This was in the Feb and the March correction of 2020. We all know the reasons why many of these asset classes corrected over here. But then you saw the sharp bounce back again coming by, and after the sharp bounce back, gold prices yet again went to a consolidation and then a rally again. Now interestingly, this is where we are right now. This is the point D, or this is the consolidation D, which is very important. We are back in that consolidation for the gold prices yet again. So from 2050 to 2100, the gold prices have corrected, as I said, approximately 250 to $300 from the highs, and now we are back into the consolidation. Interestingly, so far, this is the third month of a consolidation which is going on. So the month of August, the entire month of September, and the start of the October so far, the third month of consolidation. Now, when you look at the price patterns on the range A, B, and C, we've seen typically a 3 to 3.5 month as an average period of consolidation, which has shaped up. Gold has now come back to the to the support trend line. As you can see, the support trend line, and this is the second test towards the support trend line, which means over the next few weeks, I believe that gold should start, heading towards a breakout of this resistance line. And if that happens, I believe a new rally, like what you saw in the range A, range B, as well as range C, could transpire in gold. Now the question is that, to what extent, at least from a short-term view, can we expect the gold prices to rally? So we'll again reassess the breakouts from the range A, B, and C, and then try and extrapolate of how a breakout, if it happens over the next few weeks for gold, then I believe it could come back, and what prices levels can gold prices rally again. So we look at the breakouts from range A. So the moment the gold prices broke out of this range A, The breakout level, as you can see, is approximately $1,300 on gold. And the moment and when the rally happened for gold prices post that, and from the next phase of consolidation where gold prices entered, we measure from the breakout to the top, it's approximately $250. So as you can see, from the point A of breakout till the end of the the rally and the start of the next wave of consolidation, that's where we take the target range. It's almost $250. Let's look at the next breakout. That's the breakout from the point B or the range B. As you can see that the breakout was approximately at the 1500 mark, and from there on the breakout transpired till the next wave of consolidation, which was at approximately 1750 1770 zone. So you can take another $250 as the next leg of breakout. So these are identical rallies shaping up. So even though the trends may not be identical, but the fact that the pause in the trend happens at an identical zone, I think this is something interesting. Now let's look at the next one, which is the breakout from the point C. So as you can see, the breakout from the point C happens approximately at 1750 to 1800 zone. And again, it's a rally of almost $300, 250 to $300. So from 1800, gold prices rallied to almost 2050 plus levels. So this again indicates that this breakout range for gold was almost $250. And now we are at the point D. So if the breakout happens, and approximately if you keep the breakout level at say 1920 or 1930 levels, then you're talking of at least a $250 move on the gold prices whenever that breakout gets confirmed. So which means that we are now at the cusp of yet another move on gold prices. The gold prices move, if it happens in a typical fashion, what we've seen the last three waves A, B, and C, then you can expect at least a $250 breakout from the breakout point of 1930 approximately. And that should take the gold prices to an altogether new high. So which is why I believe that these could be, very good times where one should be looking to buy gold, both in terms of the time correction, which I mentioned, in terms of the potential price targets and the long-term structure of gold as well, that how the long-term structure of gold prices have behaved. So I hope guys, you like the video. Don't forget to, share, like, and of course, leave your positive comments, and don't forget to, turn on the bell notification for more such interesting videos. There is something which is very interesting shaping up in silver as well. So if you guys want, that I'll do a quick video on silver as well, ensure that you share, like, and leave a positive comment on the same. Thank you so much, guys, for patiently hearing me. Thank you.